The global trade landscape was shaken as President Trump announced sweeping tariffs on all imports entering the United States. This move, aimed at reducing the trade deficit and protecting American jobs, drew sharp criticism and threats of retaliation from major trading partners like China. China responded with its own tariffs, targeting key U.S. exports like soybeans, aircraft, and automobiles. These measures signaled China's determination to stand firm against what it perceives as economic bullying. The escalating trade tensions between the world's two largest economies have cast a dark cloud over the global economic outlook. The Dow Jones Industrial Average experienced its sharpest single-day decline in years, plunging by nearly 3%. Major U.S. corporations, heavily reliant on global supply chains and export markets, saw their stock values plummet. Economists warn of a global recession, with businesses and consumers alike tightening their belts in the face of uncertainty. The interconnected nature of the global economy means that the impact of these tariffs will be felt far and wide, potentially disrupting supply chains and increasing prices for consumers. The Dow Jones Industrial Average reacted sharply to the escalating trade tensions, plummeting by nearly 3% in a single day. This dramatic drop reflects the growing fear that the trade war could spiral out of control, dragging down the global economy. Major U.S. corporations, particularly those heavily reliant on international trade, felt the heat as their stock prices tumbled. Apple, dependent on Chinese manufacturing for its iPhones, saw its stock value plummet. Boeing, a major exporter of aircraft to China, also experienced a significant decline. The impact was not limited to U.S. markets. Asian and European markets also tumbled. The synchronized downturn in stock markets worldwide is a clear indication of the interconnectedness of the global economy. This market volatility has real-world consequences for individuals, businesses, and the global economy. Retirement savings are eroded as stock values decline, businesses postpone investments and hiring plans amidst uncertainty. The trade war, if left unchecked, threatens to unravel the fabric of the global economy, built over decades of cooperation and interdependence. The specter of a global recession looms large. The escalating trade war between the U.S. and China has sent shockwaves through the global economy, pushing it closer to the brink of a recession. The International Monetary Fund, IMF, has warned that the tariffs could shave off 0.5% of global GDP growth in 2025. Emerging markets, heavily reliant on exports to these economic powerhouses, are particularly vulnerable. A slowdown in U.S. and Chinese demand could push these economies into recession, further exacerbating the global economic downturn. Businesses are postponing investment decisions, uncertain about future demand and the impact of tariffs on their supply chains. Consumers, faced with rising prices and economic uncertainty, are cutting back on discretionary spending. This decline in both business investment and consumer spending could further dampen economic growth. The trade war threatens to undermine the rules-based trading system that has underpinned global prosperity for decades. As countries resort to protectionist measures, the flow of goods and services across borders is disrupted, leading to higher prices and reduced choice for consumers. China responded to the U.S. tariffs with a calculated show of force, imposing retaliatory tariffs on American goods and taking its case to the World Trade Organization, WTO. The Chinese government accused the U.S. of protectionism and violating international trade rules, filing a formal complaint with the WTO. In addition to tariffs, China announced restrictions on exports of rare earth minerals, essential components in high-tech products. This strategic move highlights China's dominance in the global supply chain for these critical minerals. China's retaliatory measures are carefully calibrated to inflict maximum economic pain on specific U.S. industries and constituencies. The tariffs on soybeans, for example, are designed to hurt American farmers, a key constituency in several Midwestern states. The WTO complaint adds another layer of complexity to the trade dispute and could further strain relations between the two economic giants. The Trump administration remained defiant in the face of global market turmoil and criticism. Officials argued that the tariffs were necessary to protect American jobs, reduce the trade deficit, and force China to change its unfair trade practices. However, this stance was met with skepticism from economists and business leaders who questioned the effectiveness of tariffs. Critics argued that the tariffs would ultimately harm American consumers and businesses, leading to higher prices and reduced economic growth. The trade war, if left unchecked, could have far-reaching implications for the global economy, undermining decades of progress toward free trade and globalization. The trade war between the US and China escalated. American consumers began to feel the pinch of rising prices. The tariffs, imposed on a wide range of imported goods, translated into higher costs for businesses, which were then passed on to consumers. From everyday essentials to big-ticket items, the impact of the tariffs was felt across the board. The price of an average iPhone, for example, was projected to increase by hundreds of dollars due to tariffs on components imported from China. These price increases placed a strain on household budgets, particularly for low- and middle-income families. The rising prices fueled fears of inflation, which erodes the purchasing power of consumers. This could lead to a decline in consumer spending, a key driver of economic growth. The rising cost of living added to the anxieties of American families, already grappling with stagnant wages and rising healthcare costs. The Trump administration's decision to impose tariffs on imports from allies like Canada, Mexico, and the European Union strained relations and eroded trust in the United States. These tariffs, justified on national security grounds, were met with bewilderment and anger by America's closest allies. Canada retaliated with tariffs on U.S. goods, targeting products from states represented by key Republicans. The tariffs also strained relations with the European Union, which responded with retaliatory measures of its own. The Trump administration's unilateral actions raised concerns about America's commitment to the rules-based international order. The tariffs eroded trust and goodwill, making it more difficult to find common ground on other global challenges. As the trade war raged on, the global economy faced an uncertain future. The escalating tariffs and retaliatory measures threatened to derail global growth, disrupt supply chains, and fuel inflation. Businesses and consumers alike were left grappling with uncertainty. The International Monetary Fund, IMF, warned that the trade war posed a significant risk to the global economic outlook. Finding a path forward required a de-escalation of tensions and a return to dialogue. Both the US and China needed to recognize that a trade war was in no one's interest and that a negotiated solution was the only way to resolve their differences. The international community also had a role to play in diffusing the trade tensions. Multilateral institutions like the World Trade Organization, WTO, needed to be strengthened and reformed. Countries needed to work together to uphold the rules-based trading system and resist the temptation of protectionism. Navigating the storm and charting a path toward a more stable and prosperous future required a collective effort from all countries to de-escalate tensions and work together to address common challenges.